I'd like to call the Joint Internal Services and Finance Audit and Budget Committee for Tuesday, August 15th, 2023 to order. First item is Pledge of Allegiance. I pledge allegiance to the flag
of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, next item is adoption of the agenda. Need a motion to adopt.
Romano adopts the agenda.
Support Van Sickle.
Made by Romano, supported by Van Sickle. Any changes to the agenda, commissioners? Seeing none, please vote.
Motion passes 12-0.
Next item is approval of minutes for the Joint Internal Services and Finance Audit and Budget Committee minutes dated July 18th, 2023. Need a motion to approve.
Support.
Made by Commissioner Perna, supported by Commissioner Hall. Any corrections to the minutes? Seeing none, please vote.
Motion passes 12-0.
Okay, next item is public participation. This is the first opportunity for public participation for those who would like to speak for a maximum of 3 minutes on an item which is on today's agenda. There'll also be a second opportunity for public participation for those who would like to speak on any issue. Would anyone from the public like to speak? Agenda items only. Going once, twice. We'll close public participation. Next is presentations. First presentation today is fiscal year 2022 annual comprehensive financial report. So we have Steve Smeagol, our director of finance. Also, we have Marlene Beach. Is Marlene here? There in the back. Our principal from UHY, our auditors. So we need a motion to receive and file.
So move, Hall.
Support by Haas, supported by Romano. Steve, why don't you kick it off?
Good afternoon, Commissioners. Good to see everyone as usual. As Commissioner Sabatini indicated, representatives from our audit firm, UHY, are here to present the results of the 2022 audit. And very good news, the general fund reported a surplus of about $16 million in 2022. I think the last time I updated you, I was saying it was going to be about 14 million. There was a last minute adjustment to value investments at market versus cost, and that resulted in a $2 million increase in investment income for the year. So that was the last minute adjustment. We have a clean opinion, as we normally do. Highest assurance you can get. I think clean opinion is actually unqualified, which is an old term. I think it's unmodified, might be the normal term or the current term. Fund balance is about 112 million, and about 44 or 45% of expenses. So very good news. It was a challenging year to get the audit out on time. New pronouncements, workday implementation, staff shortages, things of that nature. But I do need to make special recognition of Steve. Everybody knows Steve Adair, my deputy. He's the one that really puts this whole thing together. It's just countless hours of work, of course with the help of staff as well. But Steve does a phenomenal job on this every year. I did it a number of years myself before he came on board. I know what goes into it. It's even more complicated today than it was 6 or 8 years ago. So I want to make special recognition to Steve. And I will bring up Marlene and Mark to get into their presentation.
Stephen, if you could just introduce everyone from UHY. I know we met with Marlene, but Mike's here. He was initially here as part of the...
Beach is the partner. Mark Santachia is a partner as well. And Josh Fleck was basically the senior auditor on the job.
He did all the work. So.
Yep.
Yeah, he was out every
Been
day.
there before.
Right. Good afternoon. So we're going to do, you have a copy of the audited financial statement. We're just going to hit some highlights instead of going page by page. So like Steve mentioned, we're going to present the December 22 audit. We are pleased to report we are issuing an unmodified opinion, which, like he said, is the highest level that we can do. Now we'll let Marlene take over. and go over some of the numbers.
Same thing, but, yeah, good afternoon. Yeah, as Steve said, was a positive fund balance, positive increase in the fund balance. That was my good news, but he stole it on me. So, first thing we did was just kind of comparison between last year and this year. And look on the balance sheet. This is a few pages into the presentation, but the big one we want to look at is the fund balance unassigned. Oh, sorry. All right, there we go. Unassigned was about 91 million last year. This year it's about 108, is a reflection of revenues over expenditures for the current year. On the next page is general fund revenues. Once again, we kind of did a comparison to last year to this year. One of the things we always just kind of look at is the comparisons, not so much as the numbers directly, but kind of the percentages. And if you look at the two pie charts, they're almost identical. Federal grants, 17% last year. Once again, they're 43 million this year. Just once again, it's still 17%. So everything was fairly consistent from year to year. As Steve mentioned, I'd like to thank both Steve and Steve for their help in the audit. First year audit is always interesting for everybody. We ask different questions they're used to, and we're getting used to the things that went. But as I said, the audit was submitted on time, which is a huge accomplishment. So, as I said, revenues are fairly consistent year to year. If you look over to expenditures, and once again, we did the same thing, kind of put it into a pie chart to look at percentages year over year. In general government was 24% last year, and once again, you're looking at about 25. So once again, everything is fairly consistent. Public safety, 42%. Public safety this year was 39, went down a little bit. Excuse me. Overall, like I said, everything was consistent from year to year. Mike, want to pop into that?
So there are certain communications that our profession requires us to tell. Some of them have been communicated in our engagement letter, and we have to go farthest other. Accounting policies. If you look on note 1, are the accounting policies of the county, and as part of our audit, we make sure you are following those policies, which you were. Same with accounting estimates. They're managements to make. As part of our audit, we make sure they're reasonable, which they were. We did have no journal entries proposed by us during the audit, but during the course of the audit, the county did provide us with approximately 50 client-prepared adjustments. There were some past adjustments that we did, and they were mainly due to the investment values. They were deemed immaterial to the individual funds and the financial statement as a whole. We're not aware that this information is included with other audited financial statements. No disagreements with the county's management over the course of the audit. To our knowledge, there were no such consultations with other accounting firms. There was no issues discussed with us or with management about retaining us prior to our appointment. And again, like Marlene said, there was no difficulties encountered, especially on the first year. So Steve did a fantastic job getting us the information as timely as they could, and that's how we did it. We also have to look, in conjunction with our audit, we kind of take a look at the internal control over financing audit. It's not an internal control audit, but we do look at some of your key controls to make sure you are following them and to see how they go. And we're required to communicate in writing to you if there's any material weaknesses or significant deficiencies. These are the definitions of a material weakness or significant deficiency. And we did identify some material weaknesses and significant deficiencies. Our first finding as a material weakness is that the bank recs were not completed in a timely manner. They were brought up to date so we could continue it, but they weren't following. I think they have to be ready within 6 weeks of the month end, and to make sure that those are that. Another material weakness is that the county made a $700,000 payment to a fraudulent individual. one of the vendors of the drainage district overseen by the Department of Public Works was hacked, sent a fraudulent email requesting that the payment for the month's invoices be made via ACH to a specified bank account. The county notified law enforcement. They recovered $60,000 from the hacker, filed 2 claims with the insurance carrier. One has been reimbursed for $100,000, still looking to get another $100,000. And then on a significant deficiency, like Stephen mentioned, the investments were valued at cost. They should have been at fair market value. So then we did, the entry was proposed and it was made at that point, so that they would be kept at that point in time.
I did find a few things that we just thought brought to the attention of recommendations. One of the things we did look at was retirement payments, and just selected a random sample of items. For 1 out of the 25 we selected, the county was not able to supply documentation to collaborate the employees, or the retirees, excuse me, total years of service. Another thing we did notice is that the county, just to validate retirement status, they send out a letter. The letter requires a witness signature, but they're not validated otherwise. And we recommend the county look into a third-party provider, something that Social Security has. There are services that do independent checks and will notify the county of, when somebody has died and should be taken off the retirement. When we were looking at testing of grants, we noticed the Emergency Management Department expended funds for certain grants, but didn't apply for reimbursement in a timely manner. Some grants that were for 2021, the request wasn't done until 2023. The grant was still active. The grant had not closed. It was a 2-year grant period, so the funds, you still can apply and get the funds back. It's just that the county's expending money and not getting the reimbursement back as quick as they could. So we're recommending that the procedures just for getting money back from grants be made in a little more timely manner to keep the cash flow into the county. As Steve mentioned, there was a big GASB pronouncement that went into effect this past year, which was leases. There was a ton of work, which Steve did. Number one, just finding out all the leases the county has. And it's leases on everything, so it's a huge job. It's leasing one way or leasing things or leasing it back. So those are actually reported on the financial statements this year. They're showing up as an asset and an associated liability. The net effect is 0, but the hours that were put into it to get all the leases on were huge. Next year, I think it's actually, we could probably say this is going to be bigger and worse. It's basically the same type of thing, except it's for all subscription-based information technologies. And if you think about it, everything you have now, your Windows 365, anything you have with IT now is subscription-based. So what the county has already started doing is going through the same thing, analyzing what has to go on the financial statements. Once again, he's going to supply us with a huge list of things, and it will show up again on the statement of net position as a right to use asset and an associated liability. Like I said, the net effect is pretty much 0, but it grosses up the assets and it grosses up the liabilities. So
What
that's gonna
page is
be-
that on? I don't think you're keeping up with your
Oh,
statements
sorry.
with the page.
There we go. So that's going to be a huge item that you're going to see, and that's something that's going to be time consuming to get ready for the financial statements for this year. So hopefully GASB's slowing down a little bit. These last 2 have been huge. The implementation has had a major effect for financial statements, just seeing them on the balance sheet when you're not used to it. So that'll be the big change that we'll see next year. Here is Mike and I's contact information. If anybody has any questions, feel free to reach out to either of us anytime. Does anybody have any questions on anything?
Oh, yes, we do. So I have questions, but I'll reserve my questions to the end. So we'll start off with Commissioner Haw.
Thank you, Chair. I thought I saw on one of your charts that I can't find in the book, like the 3rd chart where it shows public safety, and the note that I saw on there showed public safety expenditures going down about 5 million. Did I read that correctly?
I'm sorry, we say that, could you repeat the last part?
Public safety
Yeah,
going,
probably from 2021, the was 77 million, it's about 73. That's
Say
net
that again,
expenditures.
please.
77 million in 2021, down to 73 in 2022.
okay. I'm gonna ask our head of finance if he could give me a brief explanation on that.
My brief explanation is I will get back with you, because I don't know, if that's quite a significant decrease.
Huge.
Yeah, so I will follow up with you on that.
Okay, second question. Under, this is my page A18, is friend of the court combined with family court and juvenile division under expenditures?
On
My A18.
shouldn't be,
Well, I can't find friend of the court on here anywhere.
but let me look.
Okay,
No, so A18 is just, budgeted actuals by department in the general fund.
okay, where do I find friend of the court in here?
Friend of the court will be toward the back on page D29.
D as in dog?
D as in dog, 29 of the, on page 195 of your agenda.
95.
Yeah, so page D29 of the audit report.
Okay. So it shows expenditures, actual expended, okay, I will look at that. From a procedural standpoint, I want to ask you a question that was asked yesterday. One of the, well, I was planning and economic development, had a budgeted item for $100,000. I believe they received a grant for $60,000 for that $100,000. So that left a balance of 60 more in their budget, right?
I'm not-
on that, okay,
I
let
think
me
I'm not
start
following
over.
you, I'm sorry.
Planning and Economic Development requested a budgetary item for $100,000.
Approval to
40,000?
spend.
Okay.
100,000, they
They-
wanted 40,000.
They had 100,000. Anyways, they got a grant. Does that money go back into Planning and Economic Development's line item budget, or does it go back into the general fund? The amount of the grant money they received.
Depends if there was a match on the grant. So I'm still not following you quite a bit. I'm hearing it, what I hear you saying is that they have a $100,000 grant, which should be in their grant fund.
No, it was $100,000 in the budget that was approved. Then they received a grant of how much?
40.
40. Okay, so does the 40,000 that they received in grant money minus the original budgetary item, does that go back into the Planning and Economic Development budget, or does that go back into the general fund?
What I would expect to happen is the 40,000 would come in as revenue into the planning grant fund. And that $100,000 expense would also be in the planning grant fund. I think what I need to do is look at yesterday's agenda and do a little research.
Okay, it was a question I believe Commissioner Van Sickle asked, and they were gonna, was it you, Don?
I think so.
Because typically the grant funds are separated from the general fund. But we may be treating this one differently. I don't know exactly what grant you're
Well,
speaking of.
Okay, then let me
We can look
talk
into it.
hypothetically. You got a budgeted item for $100,000 approved for
Okay.
expenditure. You get a grant for $50,000. Okay, so what happens to the $50,000 that was originally approved in the budget that you received a grant for? Where does that go? That question's been asked about a dozen times.
I'm still not,
Okay, we'll
Following
get
the-
together after.
yeah, I'm sorry for my confusion, but there sounds like there's $100,000 line item in a budget, whether it's general fund or a grant fund, I'm not sure which.
General fund,
So $50,000 of dollars came in from a grant.
right,
Either the general fund picked up the other $50,000
right,
if we were spending the entire 100, I assume
yes,
that's the case.
okay,
So then it would just be general fund match.
okay.
Without doing the research on the item, I'm
Okay.
shooting from the hip here and I'm,
Go back and look at the question that
Yeah.
Commissioner Van Sickle asked,
it
because
was on yesterday's
we
agenda.
never, that happens quite frequently, by the way, which is, the good news is we're getting the grant money. The differential in the story when it's presented to us is the budgetary line item doesn't recognize what happens to the difference between the grant money and what was approved. Where does it go? Does it go back into that department's budget, or does it go back into the general fund? Because now they had $100,000 approved by us, got 50,000 from a grant, so that leaves 50,000 on that budgeted line item that goes somewhere. So that's the general question. But go back and listen.
I'll
Don
research
asked it very succinctly yesterday, I thought. And that's
Okay.
been asked a lot, and I don't think we've ever gotten a clear answer. So that's the question.
Okay.
Yes.
Duly noted.
Yesterday it was about the broadband grant,
The what?
broadband grant.
Right, right. So that was the specific to it, but
Yeah, so you can
in
look.
generality, that question pops up every budget time. Thank you, Chair. That's all I have.
Chair Brown.
You know, I'm tempted to take another step of rephrasing that question.
Must have been a hard question.
In the budget, planning had $100,000 for the IT study. They received $40,000 in a grant. Okay, good. They needed $100,000, that's what they asked us for it, but they got $40,000 unexpectedly for this grant. So does that mean we deduct $40,000 from the $100,000 line item? And the question is, first of all, does that happen, or does it just stay in their budget, or does it go back to the general fund? So they only got $100,000 to spend on the study, and our general fund just got bumped 40,000 rather than, you know,
If they put 100,000 in there to spend on the
I
study,
don't think you did so good.
and they're only gonna spend 40,
That's closer.
then that line item would typically show
Might as well wash it.
budget of 60,000 remaining.
yeah.
But they're gonna spend if they're gonna spend the full 100, there would have to be a general fund match for the 60,000 that we didn't get
Okay.
from a grant. Let me just research it.
We're not speaking the same language.
No, we're not.
I
We are
got some
not.
other questions for the auditors, so
Hey,
thank
Don,
you.
don't even try to.
Wow.
Well, I was just saying, what Steve said was not anywhere near right. Talk to me after.
Pardon?
Okay.
Talk to me after.
Okay, all right.
There'll be an accounting 101 class next week.
Should have started with the chairman. He knows what he's talking about. All right, I got a question. What is your definition on the, never mind. There's a definition of estimated reliability. You said estimates were given, and you said they met a reliability test. What's your definition
They
of a
met a
reliable?
reasonable test, so that we
Yeah.
take a look at, based on the
So
estimate.
what's reasonable? Is it 10% plus or minus the
Well,
estimate?
no, that
or is
is, it really depends on what that estimate's for, and then we get a work paper to review to make sure, and we audit that to make sure whatever estimate they come out with, be it allowance for doubtful accounts or depreciation and things like that, we make sure that what's in there makes sense. So it's not like a 10% number. It really depends on what that actual estimate is and what it refers to.
Look at a lot of it's like depreciation. We test depreciation.
Go to the microphone,
to see if-
please.
Oh, sorry. I don't follow rules well, apparently. That we like things like an estimate for depreciation. That's usually an estimate on how many years something's gonna the useful life of an object or something. That's the estimate. It's not the cost or. So then what we do is we look at we don't test the year per se, but we look at the depreciation, see if it matches what, if that's 7%. If you said it's gonna be 7 years, is that done over 7 years? Is that reasonable? Do other guidances say furniture and fixtures are normally 7%, 7 years? It's kind of it's standards, but it's nothing, there's no like 10% above or below or anything. So it's,
All right. There was a note about the retirement system. They're not able to produce certain records in a timely fashion based for the retirement system. Is that just simply, just a matter of the fact that they couldn't meet your time specifications? Like, was it a week? Did they have a time a week? Or, I'm sure they have the records, they just probably couldn't produce it, couldn't get to you fast enough? I mean, what's a reasonable amount of time to get records to you, I guess is the question.
when we asked the question, we waited, they couldn't get it to us by the end of our audit field work. We normally don't ask for, say something, we have to have it within 24 hours or something. If they'd been able to get something to us by the end of the field work, that would have been fine.
So how long did they have?
About a month, so.
Yeah. All right. They did some testing on the ARP funds, correct? Or is that a separate one, Steve? Did they do a testing on the ARP funding that we received or the COVID money, I should say?
Well, that money was in the bank. They would have had some testing around cash. We haven't spent any of the money yet, so there's really nothing to test.
Are we doing a separate audit for that? Is there another
Part
audit
of
coming?
It'll be part of the single audit once we spend money,
Single audit.
which will be in 23, because we haven't spent any, it could be 24, because we haven't spent any money yet.
Was there any leftover COVID money in last year's budget that we didn't spend that had to be
I'm
accounted
sure there
for?
was over at Community Action and things like that. There was the rental assistance dollars and things like that would have been not covered yet on the single audit because it's not complete yet, but it would have been covered to a certain level possibly in their financial audit.
Okay. And then the emergency management there, the grant reimbursements they hadn't gotten to yet. Still they're in the middle of a grant process, and so they just haven't filed for the reimbursement yet. Is that what I understand has happened?
I think that's what was going on, is they were expending money and just not drawing down on the funds when they could, basically. It's not that we're gonna lose any of those dollars.
No. They just
They just need to draw down on a more frequent basis.
they have to the end of the grant cycle to do that?
Typically do, yes.
All right. You mentioned something that the board is interested in. I think it's relevant for many of the questions that we have. We approve a lot of, for Gatsby 96, the technology protocols that are going to be coming into place to report on. I mean, we approve a lot of contracts and service agreements for IT almost every month. There's always because everything we've got's got a license fee on it.
Right.
And so that requirements will help us understand that a little bit better in terms of making sure that they're compliant or there's problems with the fees. What's that going to do? Can you explain that a little bit more?
It's not gonna tell you whether they're compliant, and it's not gonna tell you if their fees are reasonable or anything. What it does is it puts it on the balance sheet as a asset of a subscription right to use for a certain period of time. And then there's associated liability, which is,
So it just takes it as a sum and puts it
Correct.
on a balance sheet?
Correct.
And those aren't presently there for your report?
that is correct.
Okay. All right. I've monopolized enough time for the moment. I'll pause and I'll pass for right now. Thank you, Mr. Chairman.
Commissioner Song.
Thank you, Chair. Regarding the material weakness, is that something that you guys found in your audit, or was that known by the county regarding the $700,000?
That was reported to us during some of our interviews, so.
Okay, Steve, I have a question for you. What were the results of the investigation? Is it still ongoing?
Not to my knowledge. I think what happened there was the email system of one of the public works vendors was hacked. then the hacker sent an email to Public Works requesting reimbursement for some valid invoices. And they had requested an electronic payment. The vendor had not ever been paid electronically before. So what happened, or what didn't happen, is there wasn't a verification call back to the vendor to verify the wire instructions. So
Okay.
that happens now, and all of their wire requests now flow through the treasurer's office.
I'm really concerned, and I know that you're not the person really for us to explain sort of the process, but I think that the Board of Commissioners should be briefed on this investigation, whether it's ongoing or if it's been closed.
I believe it's been closed. We have received some reimbursement from insurance. We're still seeking
So there's
another
been a $440,000 loss according to the reimbursement and the $60,000 that was recovered. Will this be in the Public Works budget as a loss then?
To my
would be-
understanding, it will be coming out of one of the drainage district accounts. Not the
Okay.
general fund. It'll be coming out of a drainage district.
Got it. And again, I know that you can't answer for all of this, but I think it's concerning for me, really, because we utilize technology and email so much that we really have to be diligent and cautious. Even till this day, I get emails from the prosecutor's office about cases that are not supposed to be coming to me, but to someone else who has a similar email. I'd really like to, if we can, have Jaco come before us and talk about some of the security measures that are being taken as a result of this, because I'd hate for this to happen again. And it can happen very easily.
It could, and as I mentioned, it's a process issue as well in terms of who can initiate wire transfers, can someone, they call release the wire, that those people are different people now, that sort of thing. So there's been some controls put in place surrounding that. I'm not sure of all the circumstances around
Will the
what
hacker
happened.
be prosecuted? I mean, have they been found?
I can't, Steve, I can't remember if they found them. I think they were out of New Jersey. They were able to trace something back to New Jersey, but I don't know if it ever ended in a
Okay.
arrest or anything.
All right. Thank you, Chair.
Commissioner Romano.
Thank you, Chair. Marlene, I don't know if you can answer this or Mr. Schmiegel can answer this. When you mentioned some specific grant funds were not applied for reimbursement in a timely manner, I guess it's a twofold question. Which grant funds were they and which department was it that, or were they, if they're more than one
They were
department?
emergency management grants. I think they get 3-year grants. It was, I don't know which year, what 3-year period it was. But it was in emergency management.
Management?
Yeah.
Thank you.
Thank you, Commissioner. I don't see any speakers on the board right now, so I'm going to ask a few questions. First of all, thank you to HY. I know first-year audits are always difficult and the size.
Yeah, it was just challenging on a number of different fronts.
And
So,
we've had, Plant Moran is our auditor for how
10
many years now?
Yeah.
So glad that we have a new fresh set of eyes looking at our books. Couple highlight things, obviously, the $113 million general fund balance is huge. The $60 million surplus last year, great news. My questions actually today are specific to the balance sheet, because this is the only opportunity that we get to see the balance sheet for the county. And it's extremely important in regards to a couple things. The first question that I have is in regards to the non-spendable fund balance that's on the balance sheet, and specifically the $4.6 million.
Excuse me, Joe, could you tell us what page that is, please?
Sure. It's on B3 of the audit. That's the actual balance sheet. So can you just explain what non-spendable fund balance is?
typically that's gonna be inventory balances or prepaid expenses, typically.
Okay. And then Chair Brown had asked about the coronavirus response fund. So it looks like to me we've got about $2.2 million not spent as of the end of last year, is that correct?
And, yeah, and you'll see up in the asset section of the balance sheet, most of that's PPE over at the warehouse.
Okay.
At inventory number 2.187 million
Is inventory?
is inventory. That's
So-
PPE at the warehouse.
So what is that inventory specifically?
Gloves, masks, gowns, those sorts, I don't know what else is over there. Yeah, hand sanitizer, hand variety of things.
So what are we doing with all of that inventory?
Emergency management's working on a plan to
Give it away.
get rid of it in whatever way. I don't know where that study stands. It takes up quite a bit of room over at the warehouse. It's pretty valuable at times. So they have, I think they've hired a part-time person or a contractor, I can't remember, to kind of help them through a plan to basically get rid of it.
Okay. Specific to the findings, when was the last time the county had an internal control audit?
I don't know, I can't recall when we had a specific internal control audit. We've had some departmental audits when new elected officials come on board, say the treasurer's office. I think Commissioner Miller had one over at Public Works, so we may do individual ones.
Okay.
Mostly when certain elected officials come on board. I think the treasurer might have had a review of some sort when he was elected as well.
So this question is specific to the auditors. I know what your answer is going to be, at least what it should be. The size of the county, since we haven't had an internal control audit in who knows how long, is it warranted to have one?
One of the things I would say is if there's been, because one of the things that we do look at, we do some internal control testing as part of the audit, and as part of the single audit, we do internal control testing on those major programs. I know somebody was talking about the ARPA funds. If that is a major program in next year, that program does get tested specifically, and as part of that, there is compliance testing and internal control testing. So you do get some regularly, anytime you have a single audit, and you've had a single audit about every year, just because of the amount of the federal expenditures each year. So that will be, we've not started our single audit yet, but that's part we will be doing. From an overall, just having the internal controls of the county tested, it's not a bad idea. Is it necessary? Would kind of be a thing I would say, look at, what you've had for findings in the past. Have your auditors reported things in the past? I mean, we showed what we found. As Mike mentioned, we don't test everything. So,
But you've obviously looked at previous year's audits and you've seen what those findings are.
correct. Yeah.
And that obviously based some of your testing with this audit as well, to make sure that those findings were fixed.
Yeah,
to
well,
say the least.
yeah, if there's what we do, any findings we find from the previous year, that's part of our requirement is we test to see, like you said, if they've been fixed, if it's been rectified. So any findings from this year, we will go back. So,
In regards to, obviously, we've had an unfortunate situation that was found here in cybersecurity, and I think this is more probably a question for our IT director in regards to a cybersecurity audit. But I'm sure your firm does those as well. That's kind of like the hot topic right now is
Right, yep.
cybersecurity because everyone's concerned, and obviously, we've had some fraud here as well relative to the findings. So is that something that UHY is seeing more of with their other audits, and that, say, companies or governmental units are starting to go towards having those audits done as well?
yeah, we actually are, we do them. And we are seeing both companies and municipal organizations getting them done, just because of, somebody mentioned everything that, that can happen. So,
And we do have a state contract with the state of Michigan, where we're one of the preferred vendors to do the cybersecurity testing. So we have done it with multiple municipalities in the state of Michigan.
Okay. I see more speakers. Commissioner Van Sickle.
Thank you, Chair. Excuse me. In speaking about the emergency management materials that are in the warehouse, I assume that some of those were purchased with emergency management grants that they received. And I don't know, when you say they're trying to get rid of them, I don't know what that means. I couldn't read between the lines.
Well,
But if
most of that inventory over there was purchased with CARES dollars back in the day. There may have been a miscellaneous grant here or there through, could be community action, could be emergency management. Majority of it would have been purchased with CARES dollars.
If we can, hopefully we're not going to put it in a landfill. Hopefully we're going to sell it some way.
Well, I think there's questions surrounding expiration dates and things like that as well.
Oh,
In terms
okay.
of masks and things of that nature.
I
That
wouldn't have thought a mask had an
but
expiration
masks
date.
and
but-
gowns, I think there's some expiration date,
Really?
yes.
Rubber band.
Yeah,
Well, what my question was going to be was, were we going to wind up having to get into some kind of situation of trying to refund grant money or?
I don't
money.
expect that to happen.
Okay, and then the other question I have is, getting back to the IT subscriptions, if I understood your explanation, we are now going to show an IT subscription as a cost and then also show the IT subscription as an asset?
To show it as an asset on the top of the balance sheet and as a liability on the bottom. Then that's exactly what's happened with leases this year. There's the asset and an associated liability on the balance sheet. The costs are gonna be the normal costs that go through it.
Okay, but if the subscription's for like 12 months, that asset is going to change every month. Do we change the top of the balance sheet every month to show that 1/12 this month, 1/12 is gone, 1/12 is gone, whatever?
If it's only 12 months, actually, you don't have to put it on the balance sheet. But there's a lot of rules, whether it
Okay.
goes on the balance sheet or not. But that's not something I would suggest that you redo every year, or not, excuse me, every month. It'd be more, you'd look at them again at the end of each year for your financial, when you get ready to produce your yearly financial statements. I would not recommend doing them every month. It would just be, cumbersome. There's no cost benefit to that, so.
Because that asset is just going to disappear.
It will disappear as the life of the subscription, correct? Yep.
Okay,
So if it's only a 12-month period, those aren't required to be, those don't fall under this regulation.
oh, okay.
So,
Thank you. Thank you, Chair.
Commissioner Zinner.
Thank you, Chair. This is for Steve, as Don had some questions. So, in regard to the gloves and masks and stuff, so the masks are probably going to be destroyed, I guess, I assume, whatever. So with the gloves, I'm sorry to hear that some of the stuff isn't going to be able to be used, but because we still see, I mean, I still see citizens out in the public with masks on, and I don't know if they use, some people actually still use gloves, and that could have been distributed to our citizens. So I'm a little disappointed, but do you think the gloves have an expiration date too?
I don't know the answer
Yeah.
for you, Commissioner. That's leaving that up to emergency management when they develop their
Yes.
plan. I don't know.
If it's possible, I mean, is there any, I mean, would you expect to sell those if there wasn't an expiration date? That's my question. Or
That's a good question. I
Nobody
wouldn't
knows.
expect to sell, but that's just my opinion. That's
because,
whether
you know,
we would or not, or could even.
before COVID, a box of gloves was cheap. Now everything's much more expensive. So, it just seems that if the citizens use these things
Right,
because they're
and I guess I
concerned.
would have to think to myself, if we purchase those items with CARES dollars, do we even have the ability to sell them?
Right. So
I would think not. I would think if we did, we'd have to turn that money back to the federal government
I
as
would-
program income.
yes, I would like to see if it's possible to put them somehow free for citizens. I mean, honestly, if we care, give the care gloves to the citizens.
Yeah, I'll pass that
Right,
along
right.
to Brandon Lewis and let him know what
And
your
if some,
thoughts are.
I don't know, if some people are around something,
Or the animal shelter.
or the animal shelter. Citizens first, the animal
Yeah.
second. Do whatever.
I think Steve was just mentioning that, it slipped my mind that we had apparently tried to supply or give some to cities and schools, and there was no interest. Now, again, maybe more follow-up through emergency management in terms of what they're doing to, address the issue. 'Cause it's sitting over there taking up space.
I think if they're in the public and freeze on it, they'll go, hopefully. Anyway, I don't want to take any more time. Thank you very much.
You're welcome.
Thank you, Steve.
Chair Brown, second round.
Chair.
Thank you. In the statistical section, on E13, there's a chart about ratios of outstanding debt. That's not the same as bonded indebtedness. I wonder if they could, do they look at that? Do the auditors?
What page are you on, Commissioner?
E13 of the
E13.
Statistical section of the audit.
E13. So the ratios of outstanding debt by type.
Does that tell me, that doesn't tell me bonded indebtedness, does it? I'm not sure if I don't
It
understand.
does. I mean, we have $226 million in the primary government. There's another,
I know our bonded indebtedness is low, but I'm trying to find out what it actually is.
in terms of what makes up that bond issue. We have 3 outstanding bond issues at this point in time. We have
But in terms of expressive percentage, people can use us to compare other, like Wayne County versus Macomb County. Wayne County's got a very high debt. We're very low.
We are
Just
very
so-
low.
So people could
We have a
see that.
very
and
attractive,
They can see how, by the statistics, how low we are compared to.
That's great.
It'd make the taxpayers feel a little comfortable knowing that we're not up to our eyes and we're not up in hock. You know what I'm
Right.
saying?
Aside from public works and the drain issues, which are another 200 and some million dollars over and above this number, the county has 3 outstanding issues. The central campus bonds from 2015, the 2 retiree healthcare bonds. The portion we didn't refinance in 2020, and then the portion we did. We have a very low debt profile.
I'm asking the auditors if they know. Do they know? They just did the audit, right? Would that show up in the audit? Do they look at that? I'm not sure they can give us a number. Instead of having you do it, let them do it. They paid them the money.
We did test the debt that's outstanding through confirmations and other debt. We did not compare it to other counties.
No, but what is it in terms of percentage of our revenue? That's a bonded indebtedness, right?
Yeah, we didn't test that. We do not audit the statistical section. Sorry, I always have a hard time saying that word, so.
We audit.
Why is it there?
Extra added information basically for information is required as part of your ACFR.
But how hard is it if you guys can do this probably in your sleep, right? How hard is it to get that number for us? Just so we could save Steve some time. His able staff.
Can we get it for you? Yeah, right now, no, but I could get it for you, yes,
Could
sir.
you please? I'd like to see it, just so I know
Yeah,
exactly
we
what it
could
is.
get that for you. Yep,
From a third party, so it doesn't look like we're bragging.
Yep.
Even though we are.
we can do that.
But thank you.
Yep.
Thank you, Mr. Chairman.
You're welcome. That was actually going to be one of my questions as well, Chair. So one of my other questions was on page A14 in regards to the delinquent tax revolving fund. So it appears that last year we had an increase, and I would assume this is probably from mostly investment income, in the change in position of that fund.
Commissioner, can you repeat the page you're on?
A14.
A14, I'm sorry. Skip there. Okay,
So the change in the position from 21 to 22 was about almost $2.4 million. Was that just primarily because of the investment income? I mean, that looks like that's the big chunk of it.
and they have,
And then the
you know,
supplies and
interest and fees,
services.
interest and fees as well. Is that $2 million on the delinquencies themselves?
Okay.
So combination of those two less the expenses, I don't know if it's one-to-one correlation that the surplus is specifically correlated with the interest income. It's very close, obviously.
So where does the differential of that surplus go? Does it go right back into that fund and stays in that fund?
Yes.
Okay. And the balance that's in that fund, is that meeting our delinquent tax obligations?
Yes.
It is. Okay.
Yeah. We purchase about $40 to $45 million of delinquencies each year. And there's
On average?
Yeah, on average, there's $124 million of fund balance in that fund,
So
roughly, I
there's
think.
3 times the amount of money that's.
Right. Now, of course, you've got cash flow, so that entire $124 million isn't available in cash at the point in time we get, by the delinquencies in the spring.
Right.
So,
Okay. In regards to the findings, Steve, procedurally, have we already made changes to procedures to rectify all the findings?
yes, and primarily the issue where we didn't mark the investments to cost or to market. Historically, we haven't. There's typically not been a material difference in those two things. Now with the interest rate environment, there is, so we'll be sure we address that. As it relates to the bank reconciliations, I'll say it's been challenging. We've had 9 new faces in my office over the last year and a half. 3 of those folks came from Community Action when we absorbed their fiscal team. So we've had 5 new fiscal analysts in the last year and a half. We filled the last one of those fiscal analyst positions a week ago Monday. Another one was filled last month. So we're back on board and fully staffed in terms of fiscal analysts. We have assigned a banking team, if you will. This is sort of all in relation to Workday. So we've got an additional staff member now who's been on board for several months. That's also been assigned to bank rec. So we're addressing that situation.
So the adjustment here, though, in regards to the misstatement in the investments, that's a $3 million plus.
It is, 2 million, or, yeah,
Two-
about
two-
2 million.
Oh, I'm sorry, I'm looking at the net. So $2 million plus to the county as far as assets go to that fund. Is that correct?
Yeah, that adjustment was actually made because it was, the one you're looking at right now are the past adjustments. That's based on the materiality of each fund. So a lot of those related to the alternative investments, but the $2 million for the increase in value, that was made. That was already mentioned. There was a adjustment closer to the end, and that was the $2 million. So that is reflected already in the financials.
Yep, okay.
And correct me if I'm wrong, Marlene, but that adjustment could reverse itself.
Yes.
At the time
Yes.
at the time those securities mature,
Correct.
it could reverse itself. So it might add to the surplus one year and then
Right.
draw down on it the following.
Steve, really quick, in regards to Workday, I know we're going through this transition right now into Workday. So based on findings and based on everything that's happened here, will Workday help in these types of, some of the issues that we have found with these findings?
I expect it to help in the bank reconciliations once we kind of get up and running and get our feet wet with it. Because one thing, we have an integration where the bank actually passes banking transactions into the system every day.
Okay.
Or will, when we go live.
In like a batch?
Every morning, the plan is every morning at 6 o'clock, the bank will transmit and integrate into Workday all the transactions that hit the 2 big accounts. I call them the general and the AP account every day. So that should make the matching process and the reconciliation process easier. And those are the 2 big accounts. We have several. There's a lot of different accounts, but those are the 2
But
big
those are
ones.
where the vast majority of the transactions are
yeah.
going through. Okay, Chair Brown,
Yes.
third round?
Yes, thank you. Your discussion of the delinquent tax revolving fund, I noticed in the notes that the tax foreclosures increased by $0.74 million. I thought the economy, I was surprised to see that. I didn't think foreclosures were going up last year. I thought the economy was improving.
No, it's not.
Plus maybe the level of foreclosure
Yeah, I
is
don't know.
down.
Steve, any comments?
So I'm not sure, it kind of goes contradictory to what I thought was happening.
Yeah, I believe the foreclosures went up because a lot of them were deferred in previous years because of the pandemic and the moratorium that the treasurer's office put on foreclosures in 2020 and I believe 2021.
That makes sense. I understand it now. Thank you. On B15, for the auditors, probably, Martha T. Berry, well, maybe for Steve too, you looked at the health and welfare fund. It's got $29 million, $9.5 million in there. And let's see revenues of
B15?
B15.
B as in boy?
Yeah, B as in boy. I'm sorry, I got my Warren Tucky accent.
Okay, there we are. I'm
not
sorry.
Speaking clearly.
Okay, I'm with you in your question.
Yeah, so my question is, what's going on with the welfare fund? I mean, do you guys, it didn't look like there was much action there, but there was, where did the revenue come from, the $2.2 million? Where did the revenue come from to that fund?
The operating grants, so most of their money comes from Medicare and Medicaid. That could have been private pay. So you'll see it's under an account called operating grants and contributions. So that could be private pay. The $28 million to the left of it, under charges for services, would be mostly Medicare and Medicaid dollars.
Is that money available for them to spend on improvements that they need? I mean, there was.
Yeah, it's part of their general revenue flow.
So,
I think they may have received some COVID-related money in there as well.
I mean, they need a lot of work done over there, and they're looking for money to do that, and I see $29 million sitting here. I'm wondering, well, seems like a pretty good place to go, but I'm sure.
Well,
but
you'll see, of course, they've got, $29.7 million of expenses as well, so.
Oh, well,
So you gotta
Except for
really
that.
look at, you really gotta look at the previous
Let's look at it
page and look at their balance sheet and see what their fund balance is and all that sort of
all
thing.
right, okay. Thank you. Thank you, Mr. Chairman. No more questions on this round.
That was gonna be my question. What does he have to pay right now, or what is he coming up with to pay next? Yeah,
That's a separate.
Kevin? Yeah.
yeah.
Do you want to make, is that a question?
No, thank you so much.
Okay, seeing no other speakers, thank you to our team here, UHY. Thank you to our finance team for being here and explaining this. I know there's a lot of good questions that came out of it, and I'm sure there will be more. But for now, we are done with this item on today's agenda. So we have a motion on the floor to receive and file. Please vote.
Thanks, guys.
Steve, are you leaving? Are you leaving?
You're not going to bill us for answering that other question, are they?
Pardon?
You're not going to bill us for answering that supplemental question today?
I don't know. I don't know if there was a board policy on the number of rounds of questions that are allowed.
I did violate that, but I'm the chairman.
We allowed it.
Motion passes 10-0.
Okay, next item is PFM Financial Advisors. This is an escrow restructuring opportunity for the 2020 refunding bonds. Steve and Carrie, their managing director, is here.
Yeah, good afternoon.
So we just need a motion to receive and file this presentation.
So moved.
Moved by Commissioner Song, supported by Commissioner Wallace.
So, as most of you know, in 2020, we refunded a portion of our 2015 retiree healthcare bonds. And there's an opportunity now, which Carrie will explain, to restructure the escrow account related to those refunding bonds. That will result in some potential savings to the county coming back to the general fund. The idea here is to introduce the idea to the board today, and then next month come back with a contract with PFM as well as our bond counsel, to then go forward with the transaction. And if you remember, PFM served as our financial advisors on the original issues as well as the financing issue, or refinancing issue.
I almost said good evening because I'm used to speaking to the board or the board in the evening or boards in the evening. If I may just divert for 1 minute to Chairman, I will get Steve ratios on debt compared to counties for you. So,
Thank you.
so Steve already, again, I'm Carrie Blanchett, Managing Director with PFM Financial Advisors. We refunded your 2015 bonds in 2020 for a savings of about just under $6.5 million to the county. So what we're talking about today is an opportunity, a unique opportunity, just to do a restructure of that escrow, because at the time that you refunded those bonds, interest earnings rates were really, really low. So the escrow was invested in securities that earned nearly nothing. So this opportunity is because of that. And I don't know where, okay, I'm supposed to be advancing things here. So this is just overviewing the savings, what the 2020 bonds that we're talking about were issued for, and the savings that you achieved back in 2020. And importantly noted at the near the bottom there is the earning rate on that original escrow, which was a whopping 0.339%. So what we're talking about today is taking a specific portion of that escrow, which at that time really wasn't able to earn almost nearly nothing. So there was a treasury strip that matures in August of 2025, and it's not needed in the escrow until November 2025. So it's sort of a dead period of time where you're not earning any money on it. And because of where rates are right now, you could sell that treasury market in the current interest rate environment and then buy a treasury security and achieve savings, when you compare the difference between what you sell the one for and what you buy the new treasury for. So this page just shows at the bottom the current scenario, and that's just like I said, the treasury strip matures and it sits there and it does nothing for roughly 3 months, which doesn't make sense. At the time this escrow was put in place, that asset manager, it was actually earning less money to keep it out longer. So it just, the maturity date selected was October of 25 because it wasn't adding value to have that treasury out longer. But in the bottom is just the timeline that's proposed. And we were going through this with Steve, so it says August. The reality is it wouldn't be August, it'd be whenever you decided to proceed with this and when the market was right. You would sell that T-strip in this example in August and then buy a new one which would mature in November, actually mature in October 31st. So this is just the money summary of what it looks like in the current market. We had the investment advisors update this with today's rates, and it's about $5,000 greater. So you're selling the treasury strips and you're buying the treasury note. The difference is $410,000. Today would be $415,000. We've estimated a cost to do that between the attorney's fees, the investment advisories for doing the treasury sale and purchase and the bid process, and then the verification of the escrow to be $50,000, which would be a net benefit of the $360,000. Or you can just do what we're calling there is option 3, and that is just wait until August of 2025, and then invest, buy a treasury security at that time at whatever the going rate would be. And we've shown you at the bottom there just what the earnings over that time period would be at different interest rates. So it's, option one's do nothing. I don't know why you would do nothing. That's just letting the escrow sit the way it is right now. And you let that money earn nothing from August to November. Option two is do the escrow restructure and lock in, the numbers using the rates here soon. Or you wait and assume a little interest rate risk. And when we were talking about this with Steve, he said, well, what's the risk associated with this? So he asked us to put this slide together on the risk. And, the risk is that it just doesn't make sense at the time that you do this. The benefit of purchasing the strips and, or selling the strips and buying the note doesn't make sense at the time. If that's the case, you just walk away from it. You just don't do it. We would also suggest that the county sets a minimum threshold that everyone knows going into it, that you want to save at least 200,000, 300,000, whatever the number is, and that everyone knows at that point you want to save that amount, otherwise you just don't do it. What we also suggest is that the sale and the purchase are done concurrently at the same time, because it doesn't work, right, unless you know what both pieces are. The PFM Asset Management has done a number of these. They're in the market doing these all the time. So on the far right side, there's talking about risk. There is a risk that you do all of this and you go through the process, and either the dealer that has decided to purchase your treasury strip doesn't produce the dollars, or that the treasury security that you've purchased, the dealer doesn't deliver them. You have those kind of risks anytime you do a refinancing and you purchase an escrow. It just doesn't happen. What PFM Asset Management does is they limit the brokers that they would send out the request for bids to only the ones that are reputable, that don't have problems, and they've never had a failed delivery of this. They also write the term sheet so that it's very restrictive, so it's within your parameters. And for this particular issue, unlike a refunding, the closing of the securities isn't contingent on the closing of a bond. When we do a bond issue, you have to be closed by noon. So that window for delivery of all these securities is much smaller, so you have a little bit more wiggle room in something like this. And then we note at the bottom, you've assumed this risk for any refunding that you've done with an escrow, which is the vast majority of your refundings. So I don't know if you have any questions.
Actually, I have a couple questions, Carrie. So, interesting proposal here, because basically we're in this situation because rates are going up relative to where they were when we issued this debt. So I take it this is something that's happening pretty much everywhere if they have an opportunity to do something like this relative to money just sitting there in escrow.
Right, and especially when the dollars are larger and this issue had larger amounts. So the security, you're talking about on a roughly $55 million, security, so.
Can you go back to the previous slide where it shows the three options really quick? So
That didn't come out really pretty on there, did it?
I
Not
can
supposed
read
to
it.
look like that.
So option 2 is more or less a guarantee because you're buying and selling, correct?
Yeah, and that's what we're proposing.
Okay. Option 3 is we're investing that money at a rate it could be any one of those rates. So the more that we
Anywhere
get,
between, right?
so if rates were to go higher, we're going to make more money.
Mm-hmm.
If rates were to drop, we're going to lose money rather than being more conservative and just taking option B. We know exactly where we stand. In regards to the risk, you said if something was to fall through with a dealer, your fee, is that still due payable to your company if the deal was to fall through?
No, unless everything is finished and completed. And that, we actually went around and asked everyone on the team, every professional that had anything to do with this. And I think all the answers were no, right? Correct. Because we did ask for that in writing too. So.
Okay. So this, I mean, just to kind of put it in perspective, in layman's terms, if I have a mortgage and I'm paying every month into an escrow fund on my mortgage, rather than me doing that, I could keep that money, invest it, at a later date I have to pay whatever that tax number is. But theoretically, I would be saving myself money.
Right.
Okay. Chair Brown.
Who buys the treasury strips?
You know, purchasers, broker accounts.
But I mean, why are they, I mean, the return on those are, I'm just trying to understand.
I asked the
who would-
investment advisor the same thing. It's just the market, there's a need for everything. And they're doing this all the time in the market.
Is there a penalty for us selling them? Are we locked in? Do we pay a fee for selling these?
No, I mean, you would only execute it if it made financial sense on that day. And if it didn't, there's no fee for even the asset management that would be doing the process for the actual bidding of the investments.
What type of treasury note would you put it in? Would it be?
We're not investment advisors, just so you know, we're financial advisors, and, this is something, we saw an opportunity, we were looking through all the debt, we found this, we ran it by, so they would optimize, they're trading treasuries every day, for
So this is
portfolios.
just one option of others we could invest in, so we just take the money out of the strip and we put it in treasury note, probably, but
It's
we can do other
limited.
things as well.
Your escrow is limited legally on what you can invest in, because remember, the bondholders of your bonds want to make sure that
Yeah.
those
You don't want
bonds
to
are
buy
being.
junk bonds with them, I understand.
Yeah, I mean, because you refunded the 2014 or 15 bonds with the 2020 bonds. So the bondholders of the 2020 bonds want to make sure that those bonds are going to be gone, because they don't want you to have to pay for both bonds.
Yeah, I understand. Okay. All right, thank you. Thank you, Mr. Chairman.
Commissioner Van Sickle.
Thank you, Chair. Good afternoon. I'm a little confused about what escrow is for, but maybe in listening to Chair Brown's comment, I might understand. So the escrow is the money that we're putting in that will eventually be used to pay the bond off?
So in 2015, you sold bonds to fund the healthcare obligation. And those bonds carried a 10-year call protection for investors. So those bonds were not callable until 2025. But because interest rates were so favorable in 2020, we were able to refund those in advance of the call date, set up an escrow fund. So the 2020 bond proceeds funded the escrow fund. And that is what pays the bonds on the call date. And instead, on all those bonds, the portion of the maturities that you refunded, which was all of them that were callable, the county now pays the debt service on the 2020 bonds for the vast majority of that issue. The only portion that remains until 2025 is the portion that was not callable.
So what specifically is the escrow account going to be used for?
To redeem the 2015 bonds on November 1st of 2025. To
So-
pay
so-
the original bondholders off.
So at that point in time, we have to make sure that there's enough in the escrow account to exactly match what the bonds are going to be redeemed for. Am I understanding it?
Yeah, and at any point on the 2020 bonds, the bond council wouldn't have let you do that. We actually have to have a verification as a part of this process that the numbers work, that it will be sufficient. Because bond council will not let you do this without it.
Okay. Thank you. Thank you, Chair.
Can you explain that one more time in regards to bond counsel will not allow us to do that?
So, when you do an advance refunding, you're taking out your prior bonds. So it's a part of the law, you can't refund an issue without funding, either paying off the bonds if they're callable or funding this escrow. And they will not, both bond counsel and the investors of your bonds, your new bonds, aren't gonna give you money to pay off your old bonds unless there is some secure investment, US Treasuries, something in that family. And that there has been an independent verification done by an auditing firm that the escrow securities are sufficient to pay the redemption cost at the day of the redemption. So they go through and look at the math to just do a it's a simple computation, but that extra added layer of assurance, if you will, that math works.
So in 2025, when this matures and this amount is due, what's our rate right now that we're currently paying on these bonds?
You remember? I might have had it.
On the refunded,
Or on the refunded,
or the original?
you're not paying really on the bonds that were refunded, so you're only paying now on the refunding.
I think I hear Commissioner Sabatini asking what the interest rates are on the 2020 bond, the 2020 refunding issue. That,
Yes,
I think it went from a low of 0.25% to 2.25% or 2.5%. It was really, really low.
really low.
Yeah.
Because that's when we refinanced and dropped it even
Yeah, I think the
more
original
than
bonds were like
originally
between
issued.
2.5% and 4% or something
Right.
in that.
It was like
Don't
almost
quote me, I
50%,
don't know
50
exactly,
cents on
but
the
it was
dollar.
quite high, quite
Okay.
a bit higher, put it that way.
So I'm just looking at what we're borrowing at compared to what we're earning here. I mean, basically, we're borrowing money at way below prime. I mean, these rates are ridiculously low that we can't get again today. I mean, compared to what today's rate is to what we refinance it at.
Exactly, you couldn't touch the rates that you're paying on those. Remember, that's a taxable issue. You
Correct.
can't touch those on a tax exempt issue. So,
Trying to find the rates for you, Commissioner.
Oh, yeah, they're in the statements, aren't they?
Yeah, they're in the debt footnote.
I went to go print it out, but my printer broke, I had meetings, and none of my color shows.
So 2020 refunding is, that's drainage districts, pardon me. I'm sorry, between 0.489 and 2.2
Wow.
is on the refunding bonds. The original bonds were 3.076 to 3.9
Wow.
on the ones that are still up.
That's the ones that are outstanding, they would have been
Those are the-
higher.
Yeah, those are the ones
Right.
outstanding. So significant savings there by refunding.
Right. So of the options, you're proposing, Carrie, option 2, because it is a buy and sell scenario with a guaranteed of net back to the county.
Yeah, you're removing your interest rate risk.
Okay. Seeing no other questions regarding this. Thank you. Please vote.
Thank you.
Motion passes 11-0.
Steve, if you want to sit down at all today, I know you've been at that podium all day.
If you just have no questions about the quarterly report? or
But you
the-
wanted these all on the agenda, so we did it. Next item, and Nicole patiently waits. We put Nicole. Next item is Finance Department 2023 second quarterly financial report. Need a motion to receive and file.
So moved.
Moved by Kraft, supported by Wallace. Steve?
I'll open up the floor if commissioners have any questions. I normally don't make very many comments in the portion of the year. What I do know is through the end of last payroll is our largest expense, of course, in the general fund. And we are tracking at about 98% of budget in that particular area after we factor in a 3% turnover factor. So we're running about 5% under.
Great.
So
What does that equate to if we were to take a snapshot in savings for the year?
I think my estimate was about $3.8 million if it continues on through the end of the year.
Okay. I don't see any questions in regards to second quarter update. Please vote.
Motion passes 11-0.
Okay, next item is 7A. This is the ordinance for fiscal year 2024 August year-end funds budget appropriations ordinance. I need a motion to recommend this to full board. Moved by Kraft, supported by Wallace. Steve?
So as you know, about this time of the year, we come to you 2 or 3 months in a row to appropriate dollars on a continuing basis for some of the fiscal year programs that have programs starting before we actually get to the point of adopting a budget for the following year. And this particular item is for the Head Start program that has an oddball year end of August 31st. So they have their new program year starting September 1st. So this is appropriating 5 months worth of budget, basically.
Okay.
Or 4 months of budget, I'm sorry. September through December.
Seeing no questions, please vote.
Motion passes 12-0.
Okay. Nicole, patiently waiting. Next two items, 7B and 7C. This is a purchase from Russ Milne Ford for 2021 Ford Explorer for $39,995. And also a purchase of LaFontaine Chevrolet Buick GMC for 3 2023 Chevrolet Transverse SUVs for $106,595. I'll take a motion to recommend 7B and 7C to full board.
Support.
Moved by Wallace, supported by Van Sickle. Nicole?
Afternoon, everybody. Okay, so these 4 vehicles are actually for Meals on Wheels. They have grant money that has to be expended by 9/30. So this is probably the last group of the items that they need. LaFontaine was able to give me the fleet price for the Traverse, and they're actually working on a 4th Traverse for me because they need 4 SUVs, which I would do in place of that Explorer, but I can't guarantee that for. So that's why I'm asking for the approval for the Explorer now, which also leads me that I might need a possible emergency bypass for next month, because if they do find one, I will need to snag it right away, considering it's still August. Also, I know that there's some timing issue with the implementation of new Workday, and then like the board meeting and trying to get it in and a check process, because I believe that there's a cutoff for one solution, was what I was told, where we can only put things into one solution to request checks. And I would need to do that before that cutoff and before the new implementation of Workday to get those vehicles. So just a heads up on that.
Okay. Commissioner Romano?
Thank you, Chair. Nicole, we got to put you first, so you poor thing, you don't have to wait for the very last.
I know, it's been a long
All of
couple of
these.
meetings the last couple of months.
Here,
Commissioner Romano, you're asking too many questions today. That's,
the Ford Explorer that you're buying,
Yeah.
you're paying $40,000 for. Is that including the warranty and the taxes and the title and all that good stuff?
Yes. So they were awarded $40,000 per vehicle, and they originally wanted Transit Connects, but they don't make Transit Connects anymore. So we opted for a larger size SUV where they can put down the seats. It's for the handy helpers. So it's basically just to go around. They need the space for their tools and whatever items they need for the jobs that they're working on. So the Explorers or the Traverse, which is comparable, just a different make, will work for that.
You know, I'm the last one that wants to micromanage, but I'm looking at a price of $40,000. And everything I pull up for a Ford Explorer for that year is considerably less. And I see that you didn't bid this out. And I also see that it's a time constraint here.
Yeah.
It's sensitive, but you've got till September the 30th. This is August. And I'm finding and I just real quickly went on Google and found 5 of them available for a lot less than what you're paying. And I'm trying to figure out
For
why.
2021.
Yes, unless it's a real special event, Ford Explorer, I mean, I just real quickly pulled this up, but,
You
So
better
I'm
look at the
actually-
fine print.
well, I'm looking at 5
Been out
print,
car
I'm
shopping.
going from all the way, I got one for $36,000, and that's only got 7,000 miles on it.
Well,
How many
I'm
miles
actually
on the one
trying-
we're buying?
10.
10,000?
Yeah,
Well,
but
then
I'm
that would
actually
justify it.
just
Okay.
trying to,
It justifies, I got it. Between taxes and insurance, with 10,000 miles, it's probably a decent deal.
I'm actually hoping that I can get that 4th Traverse, brand new off the lot. They haven't secured that for me yet, so
Okay,
that's my.
I got it. Thank you.
Yeah.
Thank you, Chair.
Commissioner Van Sickle.
Thank you. Good afternoon.
Hi.
I was one of the commissioners that took a tour of the animal shelter yesterday, a little off topic. We saw the Ford pickup truck that you got for them.
Yeah,
Good job. Keep it up.
thank you.
Thank you, Chair.
Commissioner Kraft.
Thank you, Chair. Hi, Nicole.
Hi.
These vehicles, are they ready right now? We approve it Thursday, you pick them up Friday? Is that how that works?
Yeah, well, I'd have to have time to get the check
I
made,
know, I'm
but
just-
yeah,
I'm-
I could
but they're-
theoretically, he's like, well, if you can give me the verbal, okay, I'll deliver it today, and I'm like, let's
Friday
just hold on a
morning,
second.
8:30? Come on. Yeah, I was just, because of the backlog we've had with vehicles, you know,
Yes.
leading up to this and whether they're available
So
or
these are
not.
actually on the lot.
Okay, that's-
And they were just able to give me the fleet pricing because they do fleet. They just don't have the state bid, but they do work with like smaller municipalities, like Flint and, they're St. Clair County, so they do
Perfect.
a lot of the northern municipalities.
Thank you. Thank you, Mr. Chair.
Commissioner Hall.
Thank you, Chair. I wanted to congratulate you on these prices. As one out
thanks.
currently looking for a new car.
I know.
It's
I just did myself.
ridiculous.
I know,
Between the interest rates and the lack of inventory,
I know.
trying to find a Cadillac is like virtually impossible.
Can't find anything.
Excuse me. I work for GM.
They make Chevys too, don't they?
And secondly, I'll talk to him later. What is the Traverse is going to be used for?
It's for the handy helpers. So, to my knowledge, is they just go around and do, jobs for different people around the county. So they have to have tools and whatever items they need to
Fair
facilitate
enough.
that job.
Thank you. Thank you, Chair. Thank you, Nicole.
Seeing no other questions, please vote. Thank you, Nicole.
Thank you, guys.
Motion passes 10-0.
Okay, next item is open bids as of August 15th, 2023. Need a motion to receive and file.
Support.
Moved by Kraft, supported by Romano. Any questions? Seeing none, please vote.
Maybe not.
Maybe not.
Maybe not. There we go. You should start singing.
Okay.
Okay, that concludes the audit, finance, and budget portion. As soon as we get the vote through.
Motion passes 11-0.
Okay, we'll transfer the committee over to Commissioner Van Sickle, Internal Services Committee.
There's even 11 people.
Thank you.
He said 12-0.
Okay, this is Internal Services Committee. And we go to item 10A, which is agreements for information technology, maintenance agreements for the third quarter of 2023. $628,442.16 with CBI for maintenance and support for CrowdStrike antivirus security of $123,286.12. Maintenance with Cisco Annuity Duo security for $98,568.68. And maintenance and support for Checkpoint Security, $254,215.36. And last but not least, we have maintenance and support for the jail tracker system, $152,372. I'd like a motion to move the full board.
So moved by Nard.
Support Zinner.
Thank you. We have a motion and support by Commissioners Nord and Zinner to move this item to full board. Sandy, you're on.
Good afternoon, Commissioners. My name's Sandy Wilson. I'm the IT Deputy Director, and Jaco is out for the next few weeks. So I'm here presenting our Internal Services Committee. All right, so as was mentioned, this is our maintenance agreements that we bring in quarterly. So there are 4 of them, 3 for the security products, which actually was a highlight of today's conversation, and 1 is for our jail maintenance system, and these are paid annually. I don't know if there's any questions specific to these products.
I don't see any questions. Please vote.
Motion passes 12-0.
Thank you. Moving on to item 10B, Government Services Consulting Agreement with Conexess Group for IT staff augmentation services, and it doesn't list an amount.
So actually what we're presenting to you, there's 3 contractors that contracting companies we contract through for IT services. This is one of the 3. The particular vendor that they provide us is for a application architect. We are asking them to include a senior application architect, so a second role, which is a $15 an hour increase if we should go to that level. And then it's like $2 every year after that. But they just gave us the 1 line offering. We wanted to add 2, so we had some movement. And we're just asking for that amendment to the contract.
Thank you. Commissioner Sabatini?
I think I actually just answered my own question, but this is just an amendment to the existing contract that we have. Okay. Thank you. Thank you, Chair.
Thank you. Seeing no other speakers, please vote.
Motion passes 12-0.
Thank you. Moving on, I'd like to take items 10C and D together. Budget amendment for information technology surveillance system replacement. Surveillance camera replacement for Public Works, $36,880, and surveillance system replacement for animal control, $75,140. I'd like a motion to move these 2 to full board.
So move Hall.
Support Romano.
Thank you. Commissioners Hall and Romano made the motion and supported it to move these to full board. Sandy?
This item is 1 for Public Works and the 2nd for the animal control building. They have cameras that are from 2008 legacy, so we are looking to replace those. And that was a 23 budget, so we're looking to amend that, move that forward. They are basically doing a replace of existing cameras. If there are any
Commissioner
questions.
Sabatini?
Thank you, Chair. I had asked Jaco about this, I think during budget season, in regards to the cameras through the county, if we were gonna have them all checked, basically across the board, because I know there were some that were missing, some that needed to be done. Has that been done across the board for the county?
Not aware of an actual audit on the cameras. I know certain buildings, like we've done it for the jail, because we try to map out what we're going to replace, so we do know ages of them, but I'm not aware of an actual scheduled
Not an audit,
replacement.
but just making sure that they're all at the par, because I think some were gonna be, replaced and some we didn't have, and just in general, I know we just added some here in this building, so I'm just curious if that whole process is done.
I can follow up on a specific answer. I know budget-wise, what we tend to do is there's a specific chunk of money, say 50,000, we put in for replacing cameras as they break, and then we try to phase out building by building, like here for animal. In Public Works, Sheriff has some for next year, probably 200 that are old. So because there's so many, we try to phase that out.
Yeah, it was in regards to the storage facility. We didn't have any there, and we had some possible theft, I believe, and then we had to have them installed, and that kind of where
Okay.
the question was drawn from.
Okay,
So,
if I can make note of that.
thank you, Chair.
Thank you. Are these cameras streamed back to like Comtech or someplace?
These new ones will be, the ones that are currently there have internal hard drives where it's stored locally.
Okay,
So anything new that goes in comes right back to Comtech.
so the new ones that stream back to Comtech don't have any internal storage or local storage?
Not
So can they be defeated by snipping a line someplace at the perimeter of the facility?
If I, potentially, if there was a snip.
Hmm?
Yeah, I mean, potentially if there was, we have redundant storage between the jail and over at Comtech. So those are the factors we try to, that we have a place to keep it safe.
But if they walk the perimeter of the animal control, of the animal shelter, and snip a wire, does it defeat the system?
It could break the system, yes. Most of it is all ran through conduit underground. So
Okay.
trying to get to those cameras would be very malicious intent.
Well, if it's like that, then
Right.
that's good, thank you. Seeing no other speakers, please vote.
Motion passes 12-0.
Thank you.
Okay, thank you.
We move into public participation. This is an opportunity for public participation for anybody who wishes to speak on any issues for 3 minutes. Seeing no public rushing to the podium, public participation. We'll close public participation and move into commissioner comments.
I'm not gonna say a damn word.
I'm just waiting for the system to catch up.
There are none.
I don't see any commissioners wishing to make comments, so we will close commissioner comments and move to,
Item 13, motion to adjourn.
Support.
thank you. Commissioner Romano and Hall made the motion and supported it to adjourn.
It's okay.